So let's see what's happening.
John, we're live. Taking stock live, 26th of the 7th, 2023. And I tell you what, John, I'm going to prove to you, right, we are at the end of the bull market as far as small, micro, nano stocks are concerned. It's rallying. It's very liquid there. It's looking very good. First of all, let's go to the indices, the big caps. Let's have a look at that because there's some movers there. Look at Rolls Royce, up 20%. It's acting like a micro cap stock, a small cap stock there. And Akara too. In fact, look at the chart on these. Look at Rolls Royce. There's a chart. Look at the gap up here on that chart. That's a good move, isn't it? And you can see, trading range here, pretty much, and literally breaks out, gaps up there. And if you go back though, look at this. There's a big gap here as well, where it's in the middle of, so a bit of resistance there. Anyway,
well, it had a horrible pandemic. Didn't it? I mean, it's it makes a lot of its money based on sort of flying time. So it's services contracts on basically the amount of hours that its engines are in the air. So when they're not in the air, it doesn't make any money.
No, exactly. Marvelous. Listen, if you are watching live, then please get involved with the comments. If you could subscribe to the channel, had the most views ever yesterday. So we're building a bit of interest, John. There are people who are tuning in for my rampy stuff and your sensible stuff, as one viewer pointed out. So that's nice. Anyway, let's look at first of all. I look at the indices there, but I want to say look at the comments because we had a few comments yesterday. Spiller68 said, just found your channel, subscribed. Well done, fella. Thank you very much. Investomatic. We're talking about micro caps and small caps and multi-bagging and all that stuff. And I said, have you had any multi-baggers? Investomatic says, not had a multi-bagger yet. Always remain positive. I'll get one though.
They will come. Do you know what? I just touching on that, going back to the talking about a couple of companies yesterday, Pebble and Altitude Software, which are in the promotional product space. I've written something, I haven't published it yet, but be up soon. But I had a look at 4imprint, right? Does the same thing. Promotional goods, promotional items, very much, US-based business, but listed in London. And getting share price up. This is astonishing how this has sort of almost crept through under the radar to become a 1.3 billion market cap business.
What's the ticker there?
FOUR.
FOUR. Someone said to me on LinkedIn, actually, said, Justin, listen, Unilever's done 1,100% in the last 34 years.
Well, precisely.
I said 34 years, I'll be dead by then. I want to
but that's what you should have started. You should have started investing a few years ago.
Yeah. But no, the thing is, listen, you're not going to beat returns on small microcaps in a bull market.
Look at 4imprint. Look at 4imprint.
Where's it gone from? So the last...
and I want you to look at the very long chart. Go back 20 years.
Let me just pull this out. Okay.
Look at that. Look at that.
Yeah. Just going
it's basically...
yeah, but what I'm saying, Joe, that proves my rule. That was a microcap when it started out. That was probably a small cap, wasn't it?
Granted. But anyway, 10,200% on that. And what it is, though, is not very exciting. Logos on stress balls is not exactly, cutting edge technology. So it goes back to my sensible and boring. People are always going to want a corporate pen and a stress ball, and that chart proves it.
Yeah. Well, but do you know what? Like I said, that's come from very small cap, and it's almost sometimes worth going back and looking at what propelled that upwards. And normally it is top line growth and all that stuff first and foremost. And if they keep growing, and that keep going the bottom line, it does that. So there's plenty of that. But listen, this is why I think we are out of a bear market. And I said last week, in fact, my cash level has gone down. I've been holding quite a bit of cash for a while, and I've started investing. So I've just seen charts moving up. But this is why I think, especially in the nano micro cap space, small cap space, first of all, they're rallying very strongly. We're seeing mid double digit, high double digit, even triple digit rallies. And that's not happened for months, okay, in this area. And I'll show you some on Vox's front page now. Also, acquisition stocks, cash shells, they're rallying. Special purpose vehicles, they're rallying too. And that means there's money inflow into more speculative assets. People are now becoming less risk averse and speculate a bit more. And also, I look at about 50 charts a day, pretty much, okay? And a lot of these companies now their share prices are going up on the 200-day moving average. In fact, the last AIM all share, over a third of the share price of the stocks in that sector, their share price is now over the 200-day moving average. That was below a fifth back in the October lows. And in fact, the AIM all share hit a low, a further low recently. But nevertheless, on a broader spectrum, more microcap stocks are above their 200-day moving average. So that's why I reckon we are starting to come out. Like I said, all the market needs to see is the figures are getting worse as far as inflation is concerned. And next week, of course, what day is it? Thursday, Wednesday. Next Thursday, isn't it? We got the Bank of England, and they're deciding whether to raise rates or not. I don't think they will. I think they've gone too far. They don't understand. They do understand. I listened to an interview with Mervyn Kinnock. You mentioned this last week, I think, but he was saying that they've gone too far. He said, the lag factor. If you take it sort of COVID and all that, and the stimulus that was put in, and the lag of that coming in, and prices rising. Now it takes a while, and this takes a while. So if anything, and the bond market thinks they're probably going to roll back on interest rates. That is good for the market. Really is.
Yeah, I think there probably will be another rate rise. I think there are still some areas of hot inflation figures in the market. You've got sort of wages are rising pretty rapidly, and services inflation is still quite high. So I do think that they might do another one, but then it's the terminal rates that people are betting will not go as far as it had initially been thought. Yeah,
absolutely. One more comment from, in fact, Michael Evans said, I was only yanking your chain when I called you a ramper. Keep up the great work, guys. Normally investing podcast videos are about as fun. It's nice. I found that when I started and doing a podcast on investing, I listened around different podcasts, and I found most of them were done, but we are middle-aged now. I never see myself as middle-aged, but middle-aged men with double-barrel names, really plumbing, and just monologues, basically. Hang on, I find investing fun. Let's try and make it a bit of fun.
Yeah,
I know.
Well, it should be fun, and there's a lot of interesting things to talk about. It should be entertaining. It should be interesting.
Yeah,
let's try and keep it that way.
And Phil Curtis, one word comment yesterday: scuttlebutt. That was picking up on what you said about thing. If I go back and look at that. So let's look at some winners here on the front page. In fact, let's cover some content here on the front page. Saietta, a good deal for them.
Yeah, really good.
Indian OEM, 60,000 units. Paul Hill there, of course, we discussed that. And the share price of Saietta is looking. Do you know what? I did hold Saietta, but it tripped out. I had a stop loss in, and it tripped out. Like I said, pretty much there. I did have a nice rise in it. It tripped up there, but now it needs to get back to that. It's nice. It's above the 50-day moving average, but it needs to get back above that. Yeah, I do like that company. I think they're doing good things. They've got some big, connections and contractors, and it's all happening in India, by the seems of it, and also in the US. But and let's be honest, electric vehicles, it's only going one way, isn't it?
You would think so. You would think so, and this is quite a big market to potentially tap into. You think about think about Indian transportation. Sort of tuk-tuks and two-wheelers are where it's at there, really. So this is a really great joint venture that Saietta has, and I think this is its third systems order. So really making some good progress there. Then Paul talks about it potentially becoming a sort of a de facto standard, because this is sort of proven, safe, efficient technology. So definitely a big opportunity there for this company. I go back to what we were talking about yesterday. I would like to sort of start seeing that turning into profits. What is the profit trajectory here?
Yeah,
so 2025 according to forecasts. So I'm happy to sit and wait and see that become get closer to reality.
Let me ask you a question, John. Right? Do you live with Mo Khan?
No, we've been just speaking a lot this week.
I know. I was going to say, at least Mo's changed his shirt.
Oh, Justin, how could you point that out?
Does
that only wear it for 15 minutes every day?
Trading update
trading update today from hVivo. Another, really strong bit of news. The thing that's most, huge revenue increases over the year, about 50% higher. But what's really fascinating is the order book, which is now up to about 78 million. Big order book. The contract's getting bigger, as I said the other day. It's diversifying across various human challenge models, so more and more science behind it, more of these human challenge models, which it can then sell across the industry. As I said, it's diversifying into different regions. So Asia Pacific is an important market for pharma development, and picks up a couple of contracts there this year. Very prudent accounting, I would say, behind that order book.
Yeah, I would as well. Just looking at that, what you got there is, first of all, growth. That's the top line there. If you're a small cap company, you need growth. That's why people invest in you. 52%, 27.3 million, up from 18. Then on top of that, the second engine of power is margin growth. Yeah. So that means more cash is dropping the bottom line, and you've got their net cash going up from 15.9 to 31.3. If they've done the fundraisers, that's amazing amount of cash going up. It's all going in the right direction, isn't it?
Yeah, it does look that way. That margin improvement is a result of the scale that's coming through the business. They have really done a brilliant job in scaling up. Going from essentially science to commercial revenues, and it's something that we talked about in the interview that you can listen to on the site. And as I said, very prudent accounting. There's been some delays in getting trials through the UK regulator, the MHRA, this year. Another bit of wonderfully working post-Brexit Britain. But
hang on a sec, though. Do you know what I did? I listened to this, and even Mervyn King says it's too easy to blame things on Brexit. And if you look at it, Europe's got, and in fact, you pointed out this week actually, the PMI figures in Europe are worse than
they're worse.
UK.
Yeah, I'm not saying.
So no, what I'm saying is, because I got a friend who's always banging on about Brexit, and listen, I did vote for Brexit. Now I'm just thinking about it, did I make the right decision? Obviously, there's a lot of PR out there, but if you look at the figures, like the Purchasing Managers Index, it's between manufacturing and the composite PMIs, they are worse in France and Germany than they are in the UK.
Which makes sense. It does make sense given what Germany's selling, and we were sort of digressing here. Germany sells a lot of industrial equipment into markets like China. In fact, China is a massively important market for German industrial goods. So China's zero COVID policy and subsequent slow reopening is proving very problematic for them. The UK, on the other hand, our manufacturing is really sort of very much high-end manufacturing, defense goods in particular, and also services, which have bounced back very strongly. So you can see where the difference is. The MHRA is a very specific example of where we were part of a sort of joint European regulatory structure. This was supposed to sort of the thinking was that this would free up the MHRA to get medicines to market quicker, and there was some evidence to that with the vaccine rollout. But there's now delays. It's it's just short capacity. The point is that because hVivo is growing in scale and diversifying, it's really been able to cope with that without any damage to hitting its forecast. So really strong performance there. Once again, for full disclosure, hold the shares.
Yeah. Well, that's why you're talking to him every day. It's like you're living with him. Okay. But just quick look at this. It's quite interesting. The French PMI, in reds are the manufacturing, right? So French 44.5 now, but below 50 is contracting. Germany 38.8. I mean, you pointed that out. But also Britain is contracting, but it's not as bad as France, quite as bad. And even the composite, which is the services and the manufacturing, 46.6 for France, 48.3 for Germany, and 50.7. So we're still expanding. They're contracting. So. Yeah. So anyway, that's there's a lot of people just blaming Brexit for everything. And I'm thinking, well, hang on a second. Let's have a look at the figures here. And Europe are not doing so well, to be honest. I haven't looked at that. Fadel Partners. Do you know anything about Fadel?
I had a look at it yesterday. I had a read through Paul's piece yesterday. It's an interesting company. It does sort of brand compliance, sort of licensing. Intellectual property management. It's a big thing. Helping companies basically look after their brands. Which in a digital world is very, very, very complex indeed. Very interesting. Digital rights management, essentially.
Okay. All right.
And basically, Fadel really, it supports brand owners in managing their brand assets.
Yeah. Like I said, the rises today are literally all pretty much micro caps. Some of them are like cash shells. And if you go to the front page of box here, look at that. 100. The top 4 are over 100%. And in fact, Aptimum, I think it's going to go down in a bit because they just released an update saying they're going to do a massively discounted fundraise probably, and they got for a strategic sale. But actual experience is a tiny, 2.97. They've come up with an order, and it's taken a massive hit because they did have a contract cancelled, but it's small numbers. I mean, literally, they are small numbers. There's been contract cancelled recently.
It's quite an interesting little area. This, I mean, it's sort of digital workplace management.
Yeah.
So it's sort of HR software systems. Helping companies. It goes back to what we were talking about with MindGym, actually squeezing, managing their employees in a way that can help drive improved performance. All I would say about companies like this, I mean, this is a 1.5 million, not even that, market cap company. And
it's doubled. I think it's doubled now.
Well, yeah, it was less than that yesterday. Big players in this market. I've worked in big companies, and you've got a lot of systems out there that are competing for attention. A lot of software as a service type systems. Workday was the one that we used in my last place. But you've got people like Sage are in this market as well. So yeah, I think small companies like this will pick up the old contract here and there, but they're competing against some leviathans. They really are.
Yeah. You need a bit of scale. I know. Yeah. Dish again is looking for an acquisition. RTC Group, they're sort of 5.6 million, up 113% interim results. I mean, look at the chart on this; is ridiculous. But RTC, isn't it? RTC Group. You can see, even if you go back to last year, and he bought in last year, you'd still be underwater on that. But even 100% rise. But it's odd amount of the revenue here. So 5 million market cap, 6 million, 45.6 million. I mean, the margins are very thin, of course, because they're just making 1.4, but they're making a profit. They don't mention cash here, and I thought no term debt. They say there. They have got a discounting sort of funding facility, the HSBC, and they've got a 400 grand. In fact, the cash went down. I did have to scroll down, and I said, how much cash they got? And I went down their balance sheet here, and they've got like 499, which has gone down from 681. They are using a bit of cash there, but but when you see something like that, it's seemingly massively undervalued. You've got to have a second look and think, what's going on under the hood there? Is there a balance sheet issue or whatever?
Well, they have got a bit of borrowing.
Yeah.
According to my figures I'm looking at, it's 5.5 million quid of net borrowing. But what I would say is, they haven't really. I mean, recruitment is it's an interesting little space, but obviously there's worries around the recruitment industry, given that recessionary forces are at work, and especially if you're exposed to, say, the engineering space, which this company is, as we've seen, big weakness in manufacturing across Europe. So yeah, I mean, revenues have been sort of going backwards for a few years. Profits have been going backwards for a few years. COVID obviously, didn't help, but I look at this and think they've got a lot of work to do to steady the ship and get back into the groove of delivering and increasing their profits. Maybe they have. Maybe that's why the shares jumped today.
Look at this, John. They're up by 42% a day, UKrproduct, and they're still under 1 million market cap. And you look into what they do, and they realise there are high-quality branded dairy products in class has been sold in Ukraine. So, right, okay, so that's why they're down a bit there. So they're taking a massive hit. Maybe that's if the war ends, surely that's going to be one of the biggest recovery plays ever. So keep an eye on UKR. Let's hope the will come. Do you know anything about Graft Polymer?
Nope.
Neither do I, but they've been technologies. What I don't like here is they mention a lot of big figures, the size of the market, the size of the company, and all that stuff, but they don't mention any amount that this contract is going to land them. But anyway, a cornerstone distribution agreement announced with a leading US pet product distributor into technologies, leveraging compelling opportunities in high growth US veterinary sector. So they're breaking into that sector. So quite interesting. But they are GPL. let's have a look at the ticker there. See how they've been performing. But like I said, we're seeing now a lot of big bounces. Oh, that's yeah, there we are. They IPO'd again, top of the bull market there, 2022 pretty much, and and they're down from where 20. Look at that, from 22 pence to 2 pence, which is 90% drop, isn't it? Pretty much. If my maths isn't that good anyway.
Yeah.
Anything you've been looking at, John, worth mentioning? Have you, apart from hVivo, of course, which your favourite?
We are looking at, so it's I need to have a proper look at it before it goes up on the site, but we've looked at Velocity Composites this morning.
Oh yeah. Do you know what? I'll look at that, because I did. Great Western Mining is one of the losers today, and Velocity Composites. But this is a company that's done a contract worth 100 million with GKN, which is obviously a big company, and yet they've come out with a delay today, so down 13%. They're only 16 million market cap, but the delay doesn't affect the overall fundamentals of the deal. Nothing changes. It's just a delay, and so some of the revenue is pushed into the further years. But otherwise, I mean, if you look at the growth on this going forward, it's quite impressive. We've got forecasts on this somewhere. But it's worth looking at this, because if you look at the chart, they had a massive rise up on that initial announcement. There you can see where it is. I've sort of annotated it. But you can see where they've gone up here, massive gap up, and then up again. So they went from literally 33 pence to 64 pence, and just come off then with no news. Come back down to this gap level, to the gap here. They came back down here, and then they've risen back up. And then they're rolling over again here. And so it's not, it seems to me, not a bad, I can't see it coming back down here, because they said the contract's all good and well. It's just a little bit of delay, which you can expect to happen with big contracts, can you? Especially when you're, a micro cap stock,
Yeah, well, delivering a very large contracts like that is not easy. There are often teething troubles. Getting work approved on these programs with with very large manufacturers like GKN. Is tricky. It is a time-consuming process. It's like getting a drug to market. These things have to be tested and safety tested, and it's a big amount of work. You're right. This revenue is not disappearing. It's sort of somewhat delayed, but obviously that has an impact on the value that this contract is worth today in the sort of in the context of the value of future cash flows and the discount rate.
Sorry.
But it is an interesting company. It's a very, very important area, aerospace and defense. So it's in the right market. We're looking at profits in 2024, a pre-tax level. So yeah, I mean, it's definitely one worth keeping an eye on. But as I say, scaling up. We talked about it yesterday. Scaling up is always a challenge for small companies, and that's why just flipping it back sort of slightly tangentially towards hVivo. That's what's so impressive there. The scaling up has been executed to perfection.
Yeah. First article inspection is what the problem is here. They do say revenue between 50 and 70, but when they say calendar year revenue, so full 20 revenue between 30 and 36 million. EBITDA probably 1.7, 2.5. So that's a good thing. They are going to be profitable, and you think with that under their belt, like I said, when you have contracts with bigger manufacturers, almost global manufacturers, it is validation of your services or your tech or your IPR there.
It is, but it's a difficult industry. I mean, I covered aerospace and defense many years ago when I was at the Investors Chronicle, and you had a raft of sort of slightly smaller suppliers who would sell into these big programs. These big, either military or commercial jet programs, and it's there is a lot of work there. There's a lot of revenue that can be made, but there are also fallow periods. It's not a license to print money in and of itself. It is a difficult industry to operate in. So you saw it sort of do this. It was ups and downs.
So
feast and famine.
Lloyd's out. AFC is interesting, actually. I quite like the hydrogen. That and ITM, I think keep the watch on, because they're starting to rally as well.
ITM had some news today. They've got a big US type.
ITM. So ITM, I mean, that says a lot to me. If you look at this, when you see sort of big rallies in the bottom here, I think that's the start of the end of the downtrend. When you've got companies that are loss-making and they were full of a lot of hype. Like I said, we go back, one of the original hype stocks, it went from nothing to sort of a couple of billion on no revenue. and now obviously you may not get that hype rise again, but the fact they are bottoming, these hype stocks, says a lot to me about the market and the start of the end of the bear market.
Yeah, there were a few of these hydrogen companies that raised an awful lot of money.
Yeah,
a few years ago
at the right time. Yeah, AFC,
yeah, and they did raise it at the right time. You know, you got Ceres Power as well, which is another interesting company. I think there's a few delays to some of the joint ventures. It's got big China deal, but these they've got a lot of cash, and hydrogen is a very interesting technology. I know you've read about hydrogen before. I think what happened was it wasn't really clear what place hydrogen had to play in the transition. And I think there was a lot of hype. I think there was lots of talk of hydrogen cars at one point, and that's I still don't think that's to be ruled out. You did have Shell got involved in a hydrogen product, and I'm sure it was with ITM, launched a hydrogen petrol station somewhere. In the a hydrogen station somewhere in on the M25, and I think they've closed it down now. Yeah, it felt like a bit of a PR stunt. But
there's exactly no customers.
Well, quite. You do have a hydrogen fleet. You have hydrogen buses and
it's like it's a bit like certain like I say bigger vehicles, like especially trains and stuff. It works for trains. Big haulage because batteries weigh a lot. So
I think some police forces were running hydrogen vehicles as well in the UK. But really, for me, the interesting thing about hydrogen is its use as a sort of part of the energy mix. So
yes,
one of the interesting applications of hydrogen is as storage. So basically, you use renewable power at times when it's not in demand by the grid to produce hydrogen. So it requires electricity as an input. The electrolyzers then extract the hydrogen from water, and you create hydrogen, green hydrogen. And what you can then do with that, it's storage. So it's storage of energy that otherwise would be wasted from renewable sources.
It's one of those things as well.
That's going to be a big application.
Yeah, it is, but it's still one of the things at early stages still, and it needs a momentum of investment because it's still quite high cost. So like I said, even to transport hydrogen or green hydrogen, which is obviously from solar or wind, it is not practical because you've got to store it at -64 or something. So they put it into ammonia. And then there's another process there to get it back out because ammonia can raise its temperature and keep it in there apparently and all that stuff. But no, there is, like I said, I think it will be part of the the energy mix. But people are saying it's going to be the most dominant one. I don't believe that, but it's still a massive area where it can take up and it'll attract a lot of bucks, going forward.
I've got a feeling that hydrogen is going to be very, very important.
It's the only true green. It's the only true green, isn't it? It's more abundant than anything else in the world. Hydrogen, and it also it's the only true green fuel out there because it comes from. Having said that, there's always iterations of this or nuances, isn't it? Because if you look at solar or wind, then to make those things you need to mine stuff, and so nothing's ever truly green. But the thing hydrogen, but the actual. Hydrogen itself is very true. No, it's very exciting. I think, like I said, there's a play now. But the fact that the movement in the market is very interesting now. These stocks are starting to rally a bit. That's not quite as convincing. That's come back down below the 200 average. In fact, we've had Phil there saying, "Can you look at Manolete?" Now we've had on the podcast, which Paul's been talking about those a while back. He interviewed. I've interviewed the CEO as well. The chart doesn't look very pretty. I don't know much of the story now fundamentally. But you see, pretty much now we're back at IPO level, which is back in 2019, and so hopefully we're going to see a bounce at this level. If it goes lower, it's a little bit worrying. But this level £2 here, maybe
it's not one I know, but I'm happy to go away and have a look, and we can have a chat about that tomorrow.
Yeah, litigation basically, and they fund litigation and all that stuff. So but I don't know what is happening there. Maybe I know it's quite chunky, some of the contracts they get. We should look into that because that is bouncing off support levels there. So hopefully it'll recover. And finally, do you know what? It's funny. I was listening to all stories on on the news and business news, and said, and Natwest Group is down by 3%. So what? It's like I know it's big for its market cap, but it's all about this story about Farage and the NatWest boss. She stood down. She had a late night, I think, because she stood down at like 1 or 2 o'clock in the morning because she was the source of the Farage thing and Coutts Bank and all that.
Well, I actually I don't think the NatWest share price fall is the result of this resignation or leaving by mutual consent. Because you look across the sector, you've got Lloyd's as well, which is down by
they've got results
2.7%. So they've got results out, and I think what the issue here is that they've delivered massive profits again, as the banking industry has been doing, but there is a lot of scrutiny on how they're doing that. And the scrutiny revolves around the net interest margin. So the difference between, what they're lending at and what they're paying out in interest, the rate at which they pay interest. And, there is a lot of scrutiny and suggestions that the banks may be profiteering by not passing on rate rises to savers. Yeah,
well, exactly. If you're going to put, a couple of grand in the bank, you probably get, what do you get these days? Luckily, you get 2%.
Yeah, not much at all.
You're going to borrow a couple of grand from the same bank. And they'd be charging you 6%, something like that, 7%. The bit in between, that's our profit.
But the NatWest story, though, I mean, it's beyond ridiculous. And one can only speculate what's gone on there. But I think we spoke about it on this podcast. Customer privacy is tantamount in this industry. And
do you know why it stinks? Do you know why it stinks, though, a little bit? Because it's all about the class and coots as a bank and reputation, all that stuff. That's nonsense. And it's absolute nonsense. It's like, oh, we're the Queen's Bank. It doesn't matter. You're a bank, okay? If people got money, all you do is loan money out. Nothing high class about that. All you do is try and scam people by interest rates, net margin. That's all you do. Same as every other bank. Don't try and be coots. And I go for Farage. I think there's a little bit of worry because Farage, he's never wanted to underplay his hand, has he? He told Sky News that the whole board needs to go. The whole board. Well, he never plays it now. I know.
No, he's not one to avoid hyperbole, but there you go. No. But yeah, it's a sorry situation.
Yeah, have you seen the thing about Joe Lewis in Tottenham? Joe Lewis, he's a currency trader, wasn't he? He's a billionaire, and he's quite anonymous for years. He's always come up in the top lists of wealthy people, Joe Lewis, but he is a billionaire trader. But apparently now, he's been charged over alleged insider trading. And this is a US attorney, Damien Williams, that said. And they said he's used his influence. And what I like about this, right, and they said, a lawyer for Mr. Lewis said it was an egregious error in judgment. But what I like, this is what this guy says. We allege that for years, Joe Lewis abused his access to corporate boardrooms and repeatedly provided insider information to his romantic partners, his personal assistants, his private pilots, and his friends. So he's basically giving tips. He's a billionaire. Everyone likes to give a tip, don't they? Not insider trading tips, but I don't know about you, John, but maybe looking at it, Editor Investors Chronicle, you must have the odd mate saying, got any tips? Any tips investing? I always get that. People saying, got any tips? Joe Lewis is a billionaire, and he can't resist giving tips. And I think, well, that's alleged tips.
I always refused to answer that question.
Yeah. Always. Well, do you know what I say? No, I don't. I normally give them the worst. I'll say, see, do your own research.
Yeah, the one thing I did suggest someone bought many years ago was Apple. It was which was a good tip, but generally speaking, I avoid it because I don't think anyone should invest on the basis of tips off a mate down a pub. It's tips off a taxi driver. It's top of market stuff. When I had an amazing taxi journey once where I was given a ton of tips in the oil and gas sector by the taxi driver, and I kind of. This was sort of, when would it have been? 2009. It's like, okay, it's top of the market. It's time to get out. I mean, I've got to be careful what I say here because I support West Ham, so it's Schadenfreude when it comes to Tottenham, anything Tottenham Hotspur related.
My son loves Tottenham. He's season tickets. But listen, I got to say though. I've learned from the last tip I give. I mean, generally when I talk to people who are investors, I don't mind because they do research, but if it's people who never research and they just want a tip, I now say invest in a fund because I've had so many people come back and me say, "What's up that stock?" And I think the last one I gave was literally about 6 months ago. I think it was Assos. I said, Assos is probably worth a look. It may recover. And since then, they've had a profit warning and they've really died. So generally now, if anyone else who's not in the game of shares, if you've got a tip, I'll say, I'll give you a tip. It's a nice fund, low cost, long-term investment. That's the best way forward.
I think so.
But even billionaires like that, can't get. I mean, his tips really mean anything good, don't they? It's like as billionaires, you give tips. It's all about that. It's about how you buy, how much money. Anyway, it's a bit more complex.
I actually read somebody in the Times. Some of these people who had received this information made extraordinary amounts of money. So
did they?
Yeah. From the sound of things. But I find the insider trading thing in the US is slightly farcical anyway, and because if you are in Congress or the Senate, I can't remember which, or both, then you can't be prosecuted for insider trading.
I know, and they say the best trader of all time is Nancy Pelosi. Her timing on stocks and shares is phenomenal, absolutely phenomenal. There's no better time, and her husband is quite good as well, coincidentally. But there we are. Marvelous. Oh, sorry, Manolete. It's not Manolete. It's Manolete, we should say. Phil's point that out. Manolete.
Manolete.
The valuation should go up just on that pronunciation. Marvelous stuff. That's it. Talking stock today. Don't run over by 5 minutes again, but